Do like to start off the show each week with kind of a summary of what's happening in the stock market. And so I'll share a screen here. Uh, this has been a really fun market, actually. It's really kind of
Hmm.
amazing altogether. You can see here, this is a pretty long chart going back to 2019. This is weekly data, but I think it's kind of incredible to see what we've been through with the pandemic, the big run up after that, the inflation that happened in 2022. And we've been climbing since October 13th, 2022. That's when we hit that low on that particular downturn. And finally broke into a new all-time high this year. So April was kind of a poor month, right?
Yeah.
But May is kind of making up for it, and we're getting what I call a V recovery, right? Where you come down and comes kind of straight back up. There's a U recovery where it kind of sits around for a while before it finally comes back around. Had basically a V recovery there also last year,
Hmm.
starting at that low point in October 27th, and so it's kind of interesting because as the market falls, you hear about all these reasons why the market's falling and how much more it might fall. I did feel like in April that things should come down a little bit further just because we'd run so much
Yeah.
and there's no real support to stop it, right? However, we ended up with a 5% downturn instead of probably a 7 to 10% downturn, which is kind of what we needed to get back down to support. Um, to me, that shows the strength of the market. And the last time this happened, you can kind of see it if you look closely, but in 2021, the market was really strong,
Hmm.
and it had a few little dips, and every time it dipped, it came right back. It's just a lot of interest to buying stocks and coming into the market. We're starting to see that again. And so, why is this happening? Well, there's this constant inflow from 401ks, right?
Hmm.
And you got matches on the 401ks. There is a tremendous amount of money in 401ks, and every paycheck, is adding to the stock market. And a lot of times, even when the market's bad, people just keep putting money in. They don't really manipulate the 401ks like they might some of their other accounts, at least in our experience and in our opinion. And so there's this constant cash flow, uh, and there's a bigger ownership nationwide of stock than there used to be, right? Partly because of the 401k. It used to be you had a pension and no 401k, and
Hmm.
so now there's no pensions for the most part,
Yeah.
except for public sector, and really it's made up for theoretically with this 401k and maybe a match. Um, so However, there are periods of time where things are kind of exciting. In other words, in this period, inflation is, it's in that 2.85% range on the core PCE year over year for the last report. Not at 2% where the Fed wants, but I've been saying for a little bit here that I think that really, the 2% number, I've been reading up on this, was really kind of just picked out of the thin air.
Hmm.
There's no real economic situation. As a matter of fact, they had trouble when they were hitting like 1.75. They were kind of worried about deflation. So I think it's a little bit low. And I read a great article talking about how it should probably be in a range, 2 to 3%,
Yeah.
right? And so we're already there. I read another article this week talking about how when the Fed stops raising rates and doesn't lower rates, what they call the pause, which is where we're at now. That last rate increase was what, July of
Hmm.
last year, right? So we've been in this pause. The average rate of return during a pause, if you look at the last 80 years, is 14%. And so that's, basically a pause has some positive to me because if they're lowering rates because the economy is falling apart, the
Hmm.
stock market's going to come down with it. Uh, if they're not lowering rates and the economy is doing well, that's kind of where we're at right now. The economy is doing quite nicely. Inflation, I think, is still a concern, even though it's in the right range on a year-over-year basis. This first quarter reports that we've got on inflation have been, a little bit high.
Yeah, and consumers are, from the sentiment, were quite worried about it.
Yeah, exactly. So that came out today. The market was up more today, dropped a little bit today. Um, the consumer sentiment survey was quite low. People are worried about the economy. Obviously, mostly I think because of inflation. Just seeing costs go up.
Yeah, we'll find out next week when CPI comes out on Wednesday. Otherwise, this week was relatively. I don't think there's any major macro news from the economy.
Yeah, we even had a 0 day on Wednesday. Basically, we've gone up every day. If we end up today, we'll see. But this week, and we had a 0 day, which I haven't had, and I've done over 1,000 daily videos, and haven't had a 0 day. We had, you know, basically no change on one day. There's not a lot going on. No, the market can do quite well though when there's not a lot of
Yeah.
reports. It kind of shows you. I guess the saying would be that whatever the primary trend is, it's just going to float in that direction without without interruption from all the different data points that might come in. So it has been a slow week, but it's a good week. We're almost at a new all-time high again,
Hmm.
and I'm gonna share again. Oops, got the iPad went out. 060264. This thing's still up. Connection lost. Find out. Yep. All right. So this is the hourly data. I presented this last week. I just think this is kind of fascinating. If you follow the primary trend concepts, one of the pieces of that is, the higher lows if it's an upward market,
Yep.
or lower highs if it's a downward market. Okay, so if you followed that, you would have made some really good entry and exit points looking at the hourly data. So I just keep this going. Let's just see how it goes. And so we can see on this last upturn here, we now have 4 low points, all of which are higher than each other. So we're still in a 1 hour primary trend. Not that important, other than the fact that we're just trying to see, what type of power do we have to kind of get back to a new all-time high. And so we're close. We got within less than 1% yesterday, kind of
Yeah.
getting to that high. However, there is a little bit of a consolidation zone that we're in here. And so you can kind of see it's waffling a little bit as we've gotten in there, kind of ripped right into it. And then we had that little low point. I suspect that we'll get to a new all-time high, maybe even as early as next week. Maybe it depends on the CPI.
Yeah. CPI could change.
It could change things. We'll see how that goes. But the momentum is definitely to the upside. One of the things that does happen, and we've seen this over and over again, when you get to a new all-time high and you're just about to break through, there's some selling pressure right there. People have sell orders in at that price point. That's what they call resistance. So it might take a little while to get there, but things are doing quite well. Actually, I'm really pleased with how the market has gone here altogether. It's been really showing its strength, and the momentum is definitely to the upside, no doubt. And because it came down, it's had a period of time now. And if you look back, we're at where we were, 6 weeks ago. So we've basically gone sideways for
Yeah.
6 weeks. That's not a bad thing after that huge 5-month run that we had.
Yeah. You need to take a break every now and then.
Yeah, I think, and I've talked about this all the time, but I think it's really healthy. You get a market that just overruns itself, it can sell off in a really big way, and then it kind of catches a momentum. We saw that in 2000, where it starts to really come down. Those make me more nervous than this scenario where it runs up and then takes 6 weeks and kind of goes sideways. Because I'd rather have a more sustainable advance. There's nothing we can do about it. We don't control these advances. It's just what we vote for, what we cheer for, and what we look for. And so I also think that it's a good way of looking at some of these downturns, because sometimes people, oh my gosh, the market's down 5% or whatever. Well, that's not a bad thing, right? In this particular case, it's a good thing. So anyway, that's what we saw happening this week. Again, I think that it's a good week altogether. Great time to be in the market as a whole. We'll have to see how things play out next week when we get the CPI report, but pretty good week this week. Very, very pleased.